Good morning, friends. Today, let's try to understand how to calculate a profitability of a Kirana store. See, what happens is it's very difficult to keep uh, the tab or accounting of a Kirana store. We can't record each and every sales. We can't record each and every receipt. We cannot record each and every purchase. It's very, very, very difficult because lot of transactions will be there, and the person who's managing a Kirana store would be one or two or three people, and those people will be busy in selling and collecting the money. So then, how do we know whether the store is run profitably or not? So let me give you an illustration how to find whether a Kirana store is going and doing profitably or not. Okay, let me give an example here. See here, let's assume the Raju Kirana store is starting the business today. So what happens? He brings in money into his business. So here let's assume he has brought 11 lakh rupees into the business. So what he does is he has to give a deposit to the owner. He gives 1 lakh deposit to the owner. So he is having balance 10 lakh cash with him. Then what happens is that he has to furnish his shop. So he spends about 3 lakh rupees in furnishing his shop. That is purchasing weighing machine, making the racks, buying the tables, and buying the cupboards, etc. Then he has to purchase material for his business. That is provisions, rice, sugar, soaps, detergents, toothpaste, bulbs, lot any items. What he has to make sales. Then the balance is 1 lakh he deposits into bank account. See, this is the starting of the business. So he brought in 11 lakh rupees. He deposited one. He gave the deposit to the shop owner. He purchased furniture. He purchased stock for business, and his deposit 1 lakh. Let's see. After 1 year, he wants to know what is his current status, whether he is doing the business profitably or not. Let's go to the after 1 year. So as you know, he brought 10 lakh capital. He gave deposit of 1 lakh rupees to the shop owner. Furniture is invested. Let's see what's the stock today after 1 year. So let's assume he's having a stock of 14 lakh rupees. So since his business has multiplied, he has done more transactions, his stock has increased. Now let's see bank account. Let's assume he's having bank account balance of 25,000. Now let's see what is this receivable. Receivable means now what happens once he starts doing business, there will be a lot of customer who will ask the credit. Sir, I'll give when I get the salary. Please record this the transaction a small book. So once I get my salary, I'll give you the money. Or somebody will say I'll give you tomorrow, day after. So there will be always an outstanding which he has to receive. So let's assume he's having about 3.5 lakh uh, amount to collect. So there's a difference of 11 lakhs. Then what happens is that so similarly, how he has to receive money from people, same way he has to pay also. The suppliers of detergents, suppliers of rice, suppliers of utensils, they'll come and say that I'll give you on credit. You can pay me later after 1 month or after 1 week. So he will also be buying on credit and he will also be selling some portion in credit. So let's assume so today he wants to know how much. So he finds out today when he's after 1 year he's calculating so many vendors he has to pay totally about 10 lakh rupees he has to pay. At the same time today when he calculates he has to receive 3.5 lakhs. So what is this 1,75,000? It is actually his profit. So so when he does a normal calculation of how much he has given, how much he invested, 10 lakh. As on today, after 1 year, he has given a deposit of 1 lakh. The furniture is valued. He has put in 3 lakh rupees for the furnitures. He is having stock. When he takes all the stocks, he's having 14 lakh rupees. He just checks his bank account 25,000. He just not jots down all the people who has to give you 3.5 lakhs. 10 lakh is payable. So he has made a profit. Wait. So here we have to evaluate this properly. So what happens is that, let's assume that furniture, what he has put, it will have a depreciating. See that furnitures, whatever he has furnished the shop, it will come for only 10 years. So that means the value of the furniture depreciates every year. So when he approaches an auditor or a person who has business knowledge, they guides him. See, you can't assume that it's your profit is 1.75 lakh. You have to take a realistic view. So now what happens is that, okay, what he does now, okay, furniture for 10 years it will come. So every year there's a depreciation of 30,000 rupees. So now he reduces 30,000 rupees from this. So here you see his profit now slowly starts dipping. Now business stock. Now the expert suggests him, see, you should not take the stock on a face value. Please check what all the expired stocks are there with you. You have to reduce that value of those expired stocks. Say that a detergent date would have expired, paste date would have expired. There should be some ragi, maida, any item which is stale. So he has to remove that. So when he removes that, he finds that around 1 lakh rupees worth of material he cannot be sold to his customer. So that is 13 lakh. So now his profit slowly again dips to 45,000. Now again, when it comes to receivable, it's 3.5 lakhs people rupees he has to get from the customers. But there are some customers who have squandered. He'll never get the money from the customer, and they're not coming to shop since past 6 months. It is very difficult to get back the money. So he finds of only out of 3.5 lakhs, only 3 lakh is genuine, 50,000 is gone. So he realizes that actually he's under loss. So this is the exact way to find out whether a shop is doing a provision shop or any trading shop in which does multiple business, whether they are doing profit or loss by a simple method. Also, now you will ask, what could be the reason why they have suffered a loss? The reasons are many. One is that it could be that some stock, somebody stole it when he was outside, or when he was looking around, somebody stole some items, and the customer stole some item. Possible. It could be that this whenever he's having hired some people in his shop to help him out, they would have stolen some money, or his profit margin is too low that he's making very little profit. Or it could be that he would have spent some money, he would have taken the cash out of the business for his personal purpose. He mixes, normally all the shop owners mix their personal money with the office, with the business money. He would have spent a lot of money, he would have pulled out a lot of money and spent, or he could have taken more provisions out of the stock for his house. So these could be few of the reasons why they have incurred loss. So hope I have made it very clear how to calculate whether a provision store can, or a kirana store is doing profit or loss. Thank you.